about. Today it will be provisional services, but we chosen this topic because that's mostly what countries are and tax authorities are looking at first. That you have an invoice on services which come from head office to the local country, and then to see what if that is arm's length, that countries can and tax authorities can agree on it. And maybe next slide, Niels. Yeah. And they will always look at the company service as the first thing, that you only invoice for services where really gets a benefit for the company that's paying the invoice on the services. So you should acknowledge that shareholders' activities, and they are on the slide and won't mention them, will not be charged as in the company service, but are cost of the shareholder for the head office. Maybe one thing is that the legal structure of the legal entity should not be a service to the other group company and should be cost of the head office. Obviously, it could be a mixed character between shareholders and maybe services, but then you have to split it, and then you have to look at in the end if those services obey to the benefit test, because that will the tax authorities say that has to see into the invoice they're receiving as one of the group companies. Is the one that paying for the intercompany service really have a benefit? And that benefit test is not always the same in each country, and maybe Akshay, Francisco, and also Michael can say something about that benefit test. And as last slide, for the more introduction. Since a couple of years, we have for low value added services, which are really supportive of nature. There's not key management like the board, but really, and sorry for doing that to the tax people, things like legal or tax advice from head office to group companies, it are seen as low value add. And for that, we can use 5% as a safe harbor. And no benchmark is required for those ones, but there's only for low value add services. For the rest, you need one. And one last comment, if you get an invoice from Quantera Global, whatsoever, that is seen as intermediary services, when you charge it through group companies, you don't have to charge it with the markup. That's in the main, I think, the very high level general introduction on this topic, which can be, you can say far more about it. I think the next one to say something about it, that's I think Michael, and maybe you can start, Michael, with the US perspective on this field.
Certainly, thank you, Theo. I guess I would just start by saying that the US is the likely most mature and long-lived transfer pricing system in the developed world. And in the US, fortunately, in the case of services, our US tax code, as well as the tax regulations that explain further the code and provide examples as well, are very similar to the OECD guidelines. And so in those countries where the legislature or government has adopted the OECD guidelines in their local laws, it will be quite consistent, generally speaking, with the regulations in the US. But in the US, the first step, of course, is to identify what is a service. And so under the US regulations, a service is an activity by one member of a controlled group of taxpayers that the renderer that results in a benefit to one or more of the members in the controlled group, who is the recipient then. And so the key elements in this definition of what is a service and beginning to identify them is our activity and benefit. And so going further then, what is an activity? It's very broadly defined in the US. That includes the performance of functions, assumptions of risks. So again, coming back to your functional analysis, it would be very important that they be aligned with that the definition of or identification or claiming that something is a service be aligned with the performance of functions and assumption of risks in the functional analysis. And then as well, the use by a renderer of tangible or intangible or other resources, capabilities, or knowledge. So, what of value is the provider or the renderer of the service providing to the recipient in not transferring it physically, but in enabling them to benefit from those resources of the renderer. And then lastly, making available to the recipient any property or other resources of the renderer. So, it's clearly then very much aligned with leading into the benefits test, so that activity must result in a reasonably identifiable increment of economic or commercial value, and that must enhance the recipient's commercial position, or that it may be reasonably anticipated to do so in the near or medium future. As well, another benefits test in the US is an activity that conveys a benefit is assumed to provide benefit to the recipient if the recipient would be willing to pay a third party to perform the same or similar activity, or if the recipient was willing and going to provide the service for itself if it could not acquire it or receive it from another company in the controlled group. And so this again kind of goes back, even tying into the arm's length principle, right? So if you would not purchase the service that you are paying for via an intercompany charge from a third party, then it's very suspect from the very beginning, and the taxing authorities will look at it quite closely when you're under examination. And then lastly, once after you have identified something as a service, you allocate the service costs among the recipients in the controlled group according to the reasonably anticipated benefits. So coming back to that benefits test, you look at all of the members in the controlled group that are receiving the service, and on a pro rata basis, using the benefit as the allocation key, you allocate the total cost pool out among all of the recipients in the controlled group. Next slide, please. And then in the US as well, under our regulations, there are specific exclusions, which Theo alluded to earlier. And again, coming back to my comment that the US regulations are very consistent with the OECD guidelines, that activities excluded from qualifying as a service are, again, indirect or remote benefits. So, the party receiving them wouldn't be willing to purchase them from a third party, or that they're duplicative of other activities that are being either purchased from a third party or purchased from another member of the controlled group, only maybe described slightly differently, even though they are quite the same service from the first service to the second service, unless those services provide an additional or an incremental benefit, and that can be demonstrated in the documentation. As Theo also said earlier, shareholder activities are excluded in the US as well. And then lastly, passive association is also excluded. So, if a recipient receives a benefit simply from being part of a multinational group, that is not considered a service in the United States. Next slide, please. And so in the United States, again, a common theme in the United States regulations being very consistent with the OECD guidelines. We have the service cost method, which, as Theo again spoke about earlier, there are certain low value add services that are able to be charged on at cost. And there's a safe harbor available in the United States by election. You don't have to file the election. You just need to have the election in writing in your documentation and in your files, along with the cost pool and how it was formed and how the costs are allocated, the benefit and the basis of the allocation. And in the US, unlike perhaps in the OECD countries, the commissioner can make a list of all of the costs that apply for this method or are available to be managed under this method for transfer pricing purposes. But rather than the markup in the marketplace being, or the profit level for these services in the market being around 5% in the US, there are services that median comparable companies have a profit level of less than or equal to 7%. And then we have the comparable uncontrolled services price method, which is very comparable to the comparable uncontrolled price method under the OECD guidelines, where the arm's length price is determined by comparison to prices charged in comparable uncontrolled service transactions, where the services are identical to or highly comparable to the services in the uncontrolled transaction. And then we have the gross services margin method, which again is very similar to the resale price method under OECD. The arm's length price in this case is determined by comparing the gross profit margins in the controlled service transaction to those in comparable uncontrolled transactions. Next, we have cost of services plus, and that, of course, is very similar to the cost plus method under OECD. And in this case, the price is determined by reference to the gross profit markup realized by the renderer in the multinational to comparable uncontrolled service transactions. And then we have the methods available that are comparable to the transactional profit methods under OECD guidelines. We have the comparable profits method, which is similar in some respects to the TNMM under OECD, where the arm's length price is based on objective profit level indicators derived from the marketplace and uncontrolled transactions of taxpayers that engage in similar business activities to the controlled services that are provided. And then using that profit level indicator, such as operating margin or Berry ratios, say, for example, to determine whether the prices for the controlled transactions are arm's length. And then lastly, you have the profit split method, which is similar to the transactional profit split method under OECD, where you take the contributions of each to the whole within the multinational and allocate the profit of that activity to the participants based upon their contributions to the profit of the whole. Again, I've said it many times, but I'll say it one more time. It's quite helpful that the US is very much aligned with the OECD guidelines. So this is an instance oftentimes where at least there is controversy that can be avoided for a multinational because the methodologies are so similar from the US to other OECD countries.
Yeah.
Thanks, Theo. I throw it back to you.
Okay, thanks. Yeah, okay. Yeah, thanks, Mark. You see how difficult it can be, how complex it can be, yeah? Okay, I think maybe for India then I'm Akshay, but it could be something for you to go into. I think Intercompany
Right.
Services in India is a big topic. I think.
Yes, it is a big topic, especially because India is a net FDI oriented country, which means it has a lot of investments from, say, US, Netherlands, UK, and because of that, most of the management sits in these respective countries, and
Mhm.
India ends up paying management charges, sometimes technical fees, sometimes group charges. And whenever there are expenditures that you are booking onto your profit and loss account, that's where it has an impact in reducing the profits. And therefore, the impact comes on to transfer pricing. And it becomes such an important topic for India to regulate. Because if you are able to pay uh, out to, say, these countries without substance as such, it might lead to instances of profit shifting. That's why India is very careful on any type of intra-group services which are paid and also received whenever the management is in India. Having said this, we have to see whether there is any detailed write-up that India has in terms of regulations on intra-group services. The answer is no. So intra-group services as such, a detailed guidance is not provided in the law. However, we take a lot of cues from the OECD, which we are not a member of, the UN, which we are a member of. So the UN transfer pricing guidelines, they have a larger influence on the Indian regulations. And we take a lot of support from the jurisprudence that is there in India. So we have a plethora of case laws on the intra-group services in India, and also we take cues from the global case laws. Having said that, conceptually, the way how it is deployed on the Indian scenario is not very different than how it is deployed in Netherlands or say the US. It all depends on the necessity and the aggressiveness of the documentation that is there to prove the actual receipt of services, the need that is for the intra-group services, the benefit analysis that is needed, the underlying valuation, which ideally is not a challenge because on the payment side, it generally we get a cost plus 7 or a cost plus 5, which India is happy to pay. Uh, the reverse scenario is not very true because the Indian enterprise will charge a cost plus 15 and a cost plus 20. So not much of a debate on the valuation side, but a lot of debate on the actual documentation and the substance itself, including the allocation ratios. The bigger issue that we face practically on ground, because what we have discussed now till now is more good from a theoretical perspective on each country level. But on the practical side, the issue that we generally face is that on the inbound services of intragroup, uh, Indian management, they don't get appropriate supportings from their group levels. And the reason cited could be that these are confidential documents which we cannot share with your tax authorities. Or maybe these are the management documents based on which we have computed a particular charge, but we cannot give you the backup documentation around it. Or there is a third party consultant at a group level who has provided these charges and the mechanism to charge, but the visibility and the transparency is not there. Because of lack of transparency, even if we make a good case out of it, and even if there are genuine payments happening from India to say US, Netherlands, Singapore, UK, they are always under question, and the adequacy of the documentation is challenged at different levels. There was a time till 2020 that most of these cases the taxpayer was winning. The reason is there were certain legal angles taken by the taxpayer that the tax authorities were never able to defend. But if you see today, most of these cases, the tax authorities have started to win because they are able to prove that there is no documentation that the taxpayer has for substantiating certain charges that it is paying. So it's a complex maze at this level, and cases of different nature are currently present in the Indian courts. around this topic itself. I'm not getting too much into the aspect about how it is read in the law because it's very similar. But yes, this is a live issue that most of us are right now facing at a multinational enterprise level. With this, I think that's an overview I would love to give on the intra-group services. We have also understood the specifics around it. Maybe a question to Abir and Asna. I mean, with all the nuances that we had at the Indian level, and we have seen that happening. UAE is an interesting market altogether. Industry-wise, I think the formality is something that it always lacked till now. It has now the tax law. It has a full-fledged accounting law. So how do you see the UAE landscape changing when we are talking of intra-group services? What's your crystal ball gazing here in terms of intra-group services and it impacts UAE? Over to you, Abir and Asna.
Right. Good question, Akshay. I mean, to keep it short and sweet, what I would start with is UAE is currently at a very nascent stage of understanding corporate tax or all its implications, or even transfer pricing to that level. I mean, we are still understanding the law. We are still trying to grasp, to analyze, and to understand the effects of how it is going to apply to us. Up until now, I mean, whatever we've been listening to you guys, or whatever we have been seeing here, is UAE was always catering to the other markets. I mean, we were keeping the books of accounts in accordance to the other markets, or transfer pricing regulations were in accordance to Europe, or say Indian companies were doing it for India. And locally, even the intra-group transactions were not so well defined. I mean, owner could have four companies and he could be taking salaries from all the four companies. It's now that they have started looking into these aspects. They have started looking into all the scenarios that is going to affect them, and it's now that the rules and regulations will start coming into play. Most important, yes, we will be following the OECD guidelines as far as possible, but again, we will have to look at the aspects from the company level. So, a company which has been here, the management sits outside, how the OECD guidelines will affect those companies from India, say, or from Europe, is still being discussed. These guidelines will come into play from next year, and we can comment about it towards this year end again, and that's where we would be able to have a better view, better idea, I guess.
May make a remark here. I think the similar things can be said about Brazil. I think it will be good to have in the end of this year a discussion on it between UAE but also Brazil. Yeah, if you're okay with it, I would like then have a step into Brazil at the moment. Yeah, as the next slide, because I think we have not a slide about Brazil specific. Yeah, this. But I think I just want to ask Francisco to say something about it, because like in UAE, also Brazil just went into those guidelines. I believe Lulu, your president, signed the law, I think in June or July, I thought June, yeah, about it.
Yes.
And maybe we have some projects together on charging costs to Brazil without having all those Brazilian local tax on it. But and next to it, you were going to OECD, and maybe you can say something about that combination and what you think what will be the future, Francisco. Yeah.
Yes, Theo. Yes, thank you. What happens is that Brazil has signed the legislation introducing the arm's length principle in the country. It will be effective as from January 2024, but companies have a choice to make an early adoption as from January 2023, and that early adoption can be claimed by December 31st of this year. It's very similar the way the Brazilian legislation is moving regarding the implementation of the arm's length principle, and that's because we are likely going to have the 5% threshold for low value added services. It was mentioned in the draft regulation, but on the final version, the tax authorities decided to hold the regulation for intra-group services. They will release it later this year. And another item which is very important to mention is that the 2022 transfer pricing guidelines of the OECD is going to be used as a secondary source of interpretation. So this means that when you deal with intercompany services, you know that the Brazilian legislation is going to be inspired by the OECD guidance in such a way that all the precautions that Theo, that Michael, and that Akshay have mentioned are going to be likely applicable to Brazil in terms of avoiding duplication of services. You have to take into consideration the actual benefits for the Brazilian source of income, and not only that, but also to prevent the charging of an activity that Brazil could see as a shareholder activity and not as an intercompany service benefiting the country. So in general lines, this is where the Brazilian legislation is moving. We are likely going to copy many aspects from the Indian legislation, because just like India, we are always concerned with defending the source. So as a source-oriented country, we are likely going to take extra caution on the verification of those items.
Yeah. So Francisco, so it will be important when you do the documentation or setting the policy on services that you acknowledge there's a lot of similarities between all the countries, and including Europe, but that you have to also look at specifics, because I think if I know the Brazilian tax law a little bit on services, you're not going to abolish your own taxation on services in Brazil. So you have to think about that aspect in Brazil even more than other countries.